EUR JPY Plummets turns a forex move into a risk signal for crypto liquidity and global markets. The pressure point is the yen strengthened as capital moved away from risk-sensitive assets during Middle East stress. The hard number to start with is this. EUR JPY dropped toward 186.5 with an intraday move of about minus 1.8%. So the useful read is not a single forex quote. It is safe haven flow. The anchor number is 186.5, while minus 1.8% intraday shows the scale already visible. That keeps the opening question tight. Can EUR JPY move past 185.8 test without the story outrunning its evidence? A viewer who only sees a single forex quote misses why 185.8 and 185 define the risk range. The important context is the move came with safe haven flows into the Japanese yen, US Treasuries, German bonds, and lower global equities. That baseline keeps the story grounded. It shows why the headline is connected to a real operating or market condition instead of a loose narrative. The number to keep in view is 186.5. The context also explains why a single forex quote would be too narrow. The story sits inside a larger structure, and that structure is what makes safe haven flow worth tracking. That baseline also explains why 185 belongs in the setup rather than the conclusion. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Here is the working mechanism. EUR JPY often behaves like a risk appetite gauge. When traders unwind risk, yen buying can accelerate through currency crosses. In plain English, the setup becomes stronger only when the process behind it holds up. The detail to test is 185.8 test, because that is where the claim meets observable evidence. If the mechanism breaks, the headline loses force quickly. If it holds, the event can start to affect decisions beyond the first reaction. The mechanism ties 186.5 to 185.8, so the next reaction is not random. The practical effect lands on yen. Crypto traders should care because broad risk aversion can drain leverage appetite and reduce demand for higher volatility assets. That does not mean every connected market moves the same way. It means the group closest to safe haven flow has to adjust first, while everyone else reads the spillover. The useful scale marker is minus 1.8% intraday. That marker keeps the consequence tied to visible data rather than turning it into a broad forecast. Euro also matters here because it shapes the route from safe haven flow to actual decisions. What remains unresolved is the open issue is whether the pressure is a short shock or the start of a wider repricing tied to energy and trade routes. The story should not be stretched past that. EUR JPY still needs proof at the exact place where the current setup could either strengthen or break. This is where viewers should avoid treating assumptions as facts. The next piece of evidence has to connect directly to 185.8 test, or the open question remains open. The proof has to appear in 185.8 test, not just in repeated claims about EUR JPY. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For EUR JPY Plummets, the next signal is whether EUR JPY holds 186.5 or slides toward 185.8 and 185 as diplomatic news arrives. That signal matters because it turns the story into something measurable. The viewer should remember 185.8 test, because that is where the next decision point sits. A clean signal would reduce confusion around safe haven flow. A failed signal would show that the current headline was not enough to resolve the story. That is why the final read stays tied to 185.8, 185, and 185.8 test.